What's going on, crypto traders? And for this week's Trader Tuesday, we're getting into candlesticks. And quickly, before we jump in, I want you to like this video, comment, subscribe, follow wherever you're watching this video. Now, here we go. So you might be asking, what exactly are candlesticks? Often used in technical analysis, Japanese candlesticks are a financial charting method used to showcase time frame price movements. And there are three important parts to the candlesticks, such as the body. We also have the top wick and the bottom wick. Usually you will see green as the bullish candlestick and red as the bearish candlestick. And then on the wick, you have the high, and this is the close of the bullish. And then we have the open of the bullish and then the low of the bullish, and the opposite here for the bearish candle. So now you know a little bit of what they are. Why use candlesticks? Well, candlesticks are one of the most used charting methods, and this alone, depending on the time frame you're looking at, can give you a lot of information about the price. What are the types of candlesticks? Now, a good rule of thumb that I use myself is when I look at candlesticks, there's so many different names for them, but typically I just look at what the trend is showing, and also I memorize each candlestick if this one means up or this one means down. Now, when you look at a price chart, you will see a lot of different types of candlesticks, bullish and bearish, but they all have different sizes, and they also have a lot of different names. Let me show you what they are. First one here, this is a spinning top, which can be bullish and bearish depending on which color it was and how it followed the previous price action, and it will look something like this. Next we have here is the Marubozu, which is also known as the bullish or bearish engulfing candle, and this is a solid candle with no wicks, with price either pushing towards the upside or the downside. And this one here usually indicates a strong momentum in the trend. And here we have a doji candle, and this is where the buyers and sellers are pretty even out. And typically when you do see price come down on a big drop and we get something like this, this does indicate a nice potential reversal towards the upside. And right here, this is a more bearish one. This is a Gravestone Doji, and usually this shows that the buyers and sellers are evened out, but more towards the downside. So the buyers try to come in, but the sellers push them all the way down. And this one is the Dragonfly Doji, and this one shows that the buyers did come in, push the price upwards. The sellers also came in, but they did find a nice balance towards the upside. So it's almost the complete opposite of the Gravestone. And when you get something like this after a pullback, this does show a nice reversal opportunity. Right here is the hammer. The hammer is typically a very bullish candle in a trend. When you do get a hammer, that means the sellers came in, pushed the price down, but in the end, the buyers came in and pushed the price to a whole new high on that candle. And right here is an inverted hammer candle, and this can also show that the buyers came in, pushed the price up higher, the sellers came back, but the buyers started pushing momentum back upwards. And typically after a reversal, this does show a potential for a nice bounce in the price. Next thing we have here is a hanging man, and this is the complete opposite of that hammer I just showed you. And this shows sellers came in, buyers came back, but at the end of that candle, the sellers regained the momentum. Now, the last thing here, we have the shooting star. This one is just like that inverted hammer, but it is bearish because if the candle did open at this level, buyers tried to come in, but the sellers pushed the price down, and it even pushed it down further than the previous candle close. So when you see something like this during a massive run upwards, that does show sellers coming in, taking control, and price is due for a correction. Now, in terms of using all these candlesticks patterns, you got to remember the rule of thumb is bulls and bears, up and down. You don't need to memorize all the names, but you do need to memorize what those candles look like in terms of what way the price is trending. For example, right here, I can see we had two shooting stars, one right here and another one right here. And as you can see, price started pushing down, and here price tried to make a new high with a rejection, and the price came right down. And since the price action was trending downwards, you can see all the following candles that were similar to that pattern, trying to make a new high and a rejection, all came with a reversal. And when price is trending up, you can see when you do get those dragonflies and those bullish engulfings, or even the hammers. Right here, we had a few of them in this nice support zone. The price started pushed up to a new high, and the same thing again, a nice support zone, bullish candlesticks, and price pushing high. And that's it. Thanks for watching. Your favorite crypto trader, John Doe. Make sure you're following me as well. I'll see you again next time.